Greetings, market rebels. Welcome to this week's sector situation. We're trying for another one here. First one crashed on me. It's Monday, February 19th, 2024. It's about 20 to 2 p.m. here on the East Coast. Let's try to go fast so we can get through this without it crashing. Here is our trusty disclaimer. Here is our trusty intellectual property rights notice. And here is the brief macro measure notes for the week. And I'll just leave them up there and then get ready to reposition things. So let me just get out of PowerPoint here and we'll switch over to a different screen. Let's see if I can get this to show square screen number 4 without fighting with me too much. Hopefully that's working now. Yeah, that's a little bit of a problem there. Complete crash. Still having Zoom trouble despite a reinstall. Not sure what to do. What I wanted to note is that overall, sectors started to participate a little bit. So the complaints that a lot of folks have and things we've acknowledged, well, this isn't joint in the market. Let's see. Okay, we still seem okay. Hopefully we're still recording here. So we'll start one more time to get this to work. Share. Okay, hopefully that brings us back. But a lot of these sectors have really tried to get it going. Now they haven't completely succeeded, but it's not as though they're falling to pieces. So if we start over here, for example, I'll click on XLK, the technology sector. Didn't have a great week last week, just like the Qs, spiders, right? Kind of a rough week on CPI near the start of the week, and then a rough finish. Same thing with XLC. Both of these, of course, are definitely in the overbought territory on some views. So that's that. Now they've been the main leaders, I would say, overall. But if you look at XLRE, and we talked about this, this could break out. It is trying to. It may have even come back to the former resistance line to try to convert it to support. Jury's still out on that one. Obviously, you're really just getting into the breakout attempt. But look at healthcare, right? Look at financials. We put some longs in financials. We talked about them creeping up, and we got some good bursts on a couple of UOA names, I think. Staples kind of chilled a little bit. I think discretionary hung in there, did have a little bit of a rough Friday. And then transports kind of overall did the same, but it kind of were looking really good there on Thursday, and then rough stuff on Friday. But basic materials up, XLI, right, with a new high, but a rough close relative to it. So if you look at the, I guess, entire picture here, you're seeing more sectors join the market's party. Is it too little, too late? Are they fully all out of the woods, right? Even energy, by the way, right? That's also trying. It's probably getting pretty darn close to the highest level it's been in a few months. Not quite there yet, but it's getting up there. So this area is what stopped it. But again, to me, that would be a good sign, in a very simple way of looking at it, that energy's flowing. That's a good sign, but it does probably hurt the consumer to some degree as well. And we'll have to see what the fallout could be from that if oil really starts to go. We'll take a look at some of these charts in a bigger way. But if you look at it overall, we can say that concerning closes on a lot of them on Friday, but overall, a lot of them have tried. So they're at the point where if they do manage to put a good week together, and a lot of these sectors participate, kind of get out of the danger zone, that could really make the market look a lot better, where there'd be a lot of sectors really firing. It wouldn't just be a few leadership sectors. We saw something similar to this last year, and things were looking really good, mainly all the way through the second quarter EPS season, which ended in July, and then we kind of went into a rough patch after that was expected, given the year it was, the pre-election year of the presidential cycle. And that cycle really played out well. That traced out fairly well all year long. So that would be the wrap on that. We XLU. I mean, it's not being bid up in a big way, so no one, I guess, is really getting super defensive as of right now. And I think the last couple of weeks in here, maybe in XTN, maybe a little concerning to look at, but the way that that's forming, but still, it's better than it was, and it did break out, and it's through, and it's trying. So we have to see what comes next. I would be sort of surprised if these things just keep going, but you did see sort of the risk on, right? You saw the XLI just popping through. I mean, they chased up basic materials. That they didn't really go after staples. They did come after, once you got the gap down on CPI, they did come after discretionary. As we said, other than Friday and the CPI gap, XTN tried. XLV stayed strong. It has been strong. XLRE trying to break out, new high for XLF. And then the leadership's taking a breather. And we often talk about that if they do this, they might rotate into other things. That may have happened a little bit, may have. I can't say for sure. But even energy, again, even energy perking. So on that, let's see if we can switch to a bigger view and look at some of these. And let me get that chart moved. Those charts moved out of the way. And there they are. They're over there now. So we can go back to them. But I think one good thing to pick up on would be SMH, since we talked about XLK. And I talked about this in macro measure because it is really the leader. And I think you can see that despite what happened here late last week, this has an overbought reading really on weekly, probably monthly, I think too. But it's not quite as overbought as it was, thanks to kind of a week of going sideways, if you will, right? You close there at 203.85. You're only down about 0.5% with Friday's ugly close, but you're still holding all the trends, right? You're still holding support lines. You're still holding your SMAs, of all of which are rising. I have more room on it using just classical trend line drawing, technical analysis, about as basic as it gets, but there's more room there. Like I said in the prior video, I've seen just stocks, in this case an ETF, just with an uncanny ability to reach this outer boundary somehow before it's all over, if you know what I mean. So still hanging in there. You got to be a little concerned that it lost momentum. So be a little bit more guarded about that. But again, a lot of what we're discussing could get blown up in it could blow up with NVDA, and that EPS reaction could be a really big one. I'm jumping to XLRE since we can take a look at how rates started to go up really towards the start of the year, and you could see that the XLRE started to go down towards the end of the year. So TNX near the start of the year started lifting back up, 10-year yield, and you could see that we've been sort of working our way higher. So XLRE has been working its way lower, but very interestingly, TNX had an okay week, but it didn't really do much. Ultimately, it kind of popped up and then held on. This tried to break out. So this, and it held on to just barely above the former resistance line. So this is maybe something worth watching, because if this starts to go and you see TNX dropping off, that could be pretty big. XHB, we've been charting XHB in relation to XLRE and TNX. And XHB is still hanging in there, right, despite everything. So despite my thesis of it's going to be very hard for people to afford new homes with these kind of interest rates at these kind of housing prices. But it doesn't seem to be, it may be showing up in some statistics. It doesn't seem to be showing up yet in the way that the market's treating home builders, though. But this had the consolidation, right, broke out from there, came back in there, tried to go again, lower high as of right now. So I think, again, I'd be a little more cautious in there. It is overbought on a weekly, but it did cool off on a daily. So again, I think you're going to be cautious there for now. Probably your cue is it takes out that high from early last week. And if there's still, if you see rates falling and most sectors going, and certainly the major index ETFs going, then you're like, okay, this thing may still go. So again, I would trade it that way, despite the fact that it doesn't really jive with my basic take. But let's see now. So there's XHB. Let's take a look back over at XLE. And you can see that this is getting a little bit better, right? It's got really this kind of shelf that it built. And then from about 3 weeks of consolidating after lifting off the bottom, now it's really close to overtaking all the SMAs. The only one left in its way is the rust colored 150, which a lot of people don't even chart. So it did struggle right at it, though. Again, maybe it sensed it there. I don't know. It struggled right at it. This is right near where there's been resistance before, though. So it's sort of dovetailing right with 150s, dovetailing with those other right near the other forms of resistance, really more of a flat line. So having said that, I think, look, if this thing gets up towards taking out this high, you really have a story finally, because you will have this low, this high, this sort of secondary little low here, slightly higher low, but then you'll be making higher highs. You already have a higher high relative to here. You'd be having a higher high relative to there. That would be really the start of a potentially a real trend change. And if that's the case, right, again, that usually is a good sign that things are picking up or what have you in a simple way, because I don't follow the oil market anywhere near the way I used to. I just don't have time for it. But in a simple way, that would be a good sign. It just, again, you have to factor in how that affects the consumer in terms of inflation. Here's the oil future. That, right, looks somewhat similar. So I think it's starting to get more threatening in terms of being able to maybe do something finally. It's just got to break out. It's probably going to be very widely followed because right in the space it occupies, and there's a lot of people that are interested in trading it. So maybe it's getting ready. Definitely worth keeping on your radar now. And it's always, right, all my reminders for breakout supply, right? You can't rule out a false breakout. You can't rule out a good breakout that then pulls back, touches the former resistance, converts it to support, and then goes again. So there's a lot to take into consideration when you're trading a breakout, which is why I think like a quick roll and a quick trim make a lot of sense. And then if it just keeps going, great, just leave on your balance and roll from there. But while we're on futures, here's the copper future, right? Nothing special there. It probably would be good if this started to work its way back up too, and you can see it's been in the channel. It would start to go, and that would be something too. That would be again more of a positive macro sign. I meant to look at wood and cut when we were looking at XHB, so my apologies for backtracking. But they've been struggling. Cut's been they pretty much trade similarly, right? But they've been struggling. They are looking like they're trying to pop back up, but that's very interesting, and that they're kind of at odds with the XHB. XHB definitely hanging in there much better. These seem to be reflecting maybe my own instincts of things can't be that rosy there for much longer. We'll see. I guess I could definitely be wrong, since I'm not dialed into the housing market either. Don't have time for any of that, unfortunately. But moving on with our coverage of things. So XLE, definitely one to watch, I think. XLK, right? This would be the loss of leadership, but if they do, that's at a critical juncture right there. And you got overbought on the monthly, you got overbought on the weekly, you're starting to maybe fail. And again, I looked at Microsoft, I looked at Apple, just two of the Mag 7. They do look vulnerable. There's room down to the 50 here on the daily and XLK. So if you do get a crack, right, that is obviously not a good sign, given that it's been a leader. Same thing for XLC. But remember that they are coming into other areas. So we might see that these be allowed to take a breather if they're going to buy other sectors up for real. So I think that's another thing to look forward to this week, which is, well, maybe through this week because of the NVIDIA earnings. The financials are acting really well. You've got to be happy with that overall. They continue to act well. We saw more UOA. I forget which, I think I had Citi and WSC, and the UOA was very strong on Thursday. And you don't often see this kind of a move out of WFC in one day. I might even flash a little more to see if there's anything like that on here. That candle there looks to be like one of the largest candles really we've seen over the course of the last year. We had a couple, maybe that down candle there rivals it, but that was a really powerful candle out of WFC. Massive UOA activity that particular session. We got that one in, but that overall, the XLF, you've got to like what you see there to this point. I mean, it's just barely off of making a new recovery high. I think, right, that's a recovery high. I'm pretty sure it's been higher than that before. Yeah, a 41. Yep. So, but that's sort of broke, right? You can see the breakout of that long consolidation that it was in. We'll just put it, since we're on the monthly chart, let's just drop a line on that just to show that a little bit more. Breaking out from there, now it has to, you're not far away from targeting this. You break through there, you might be able to extend and have a real leg higher. That would be a really good sign. How it's all happening, again, I don't know. Don't even have time to figure it out, but maybe these banks are liking these higher rates and they're able to do more with them. Those guys are just winners all the time, so it doesn't really matter. And then when they're not, they're still winners. The government makes it so, along with the Fed. Anyway, real estate, like we talked about already, so I don't want to belabor that, but will it break out? Will it kind of recouple with XHB, or will it fail and maybe XHB also starts to fail and come in line with where wood and cut are? So probably another one worth looking at. XLV, looking at this bigger picture. Again, I don't know what you, usually this is defensive, but it's, at the same time, it's not really. Sometimes, depends on probably what's going on inside of it, but it's been an amazing run for it. You could visually at least. And so I hate that I just noticed that this switched over to percent on me. But really, right, a heck of a run. At this point, you're overbought on the weekly, you're overbought on the daily. So again, you're probably in some thin air up there. You probably have to be careful. Your Bollingers are super wide. All that's telling you, just stay with the strong trend, but be careful and really have a nice kind of touch to what you're doing, right? If you're involved in that or in names in there that have had a strong run and look somewhat like this, but that's obviously doing well. XLP, more of a defensive look, the way we check it out each week. That kind of signals to me versus XLY that they started going back in a little bit more for XLY, and it was on its way until we had kind of that rough close in the market on Friday that affected a lot of stocks and a lot of sectors. But it seems like XLP was a little more dormant and XLY was looking to participate more when it could. So again, if this breaks out past Monday's high of last week, it'll be really close to this high. And that's really a potentially good sign that they're coming in for discretionary that way. So maybe not this week. I don't know if it'll be able to break out. Maybe it will. But that would be a really good sign if we look at this a little bit bigger picture on this one, right? You can see it's sort of probably lagging behind some other sectors that have taken the cup and handle on the weekly that we talked about so many months ago, and we continue to talk about. They've done better work with it, so it's lagging. So yeah, it would have potential to really go if they break that out above, let's call it that 182.19 level. So you get through there, and maybe you're short-term overbought, but other than that, that would open up, I think a lot more potential for it. So that would be another one to keep an eye on for that to happen. XTN, a very important sector, I think, along with financials and energy. This was looking really rough a few weeks back, but you could see it started to break out, at least break out of that corrective activity, trying to work its way back up just shy of this recent high. Got to be careful that it doesn't double top. If somehow they take these Nvidia earnings and turn them into a problem somehow, or other things that are off the radar develop and turn into problems. But this is, excuse me, this is nowhere near overbought right now, and it's sort of on its way back. I would be careful below the 10-day. You can see the rising 10 in white. I'll just put a line right below there. It pretty much is going to dovetail right over top of that. That's, your initial, hey, I don't want to crack that area if you're a bull. As long as it holds there and the market's going, right, you could probably stay along this or names within it. But this is a little dicey here with this lower high, similar high, close to support, sort of needs to do its thing to the upside now and not later. Because if you risk not doing it now and you get weak, you're probably on your way to a test of the 20 and 50, since they're not too far away and they're the two big levels that get tested a lot, and they're really very close to each other. So then you'd have to see if that holds and what it can do from there. But overall, let's give that one a C plus. It probably was having a pretty good week overall with a new recent high, other than that Friday rollover. Basic materials, XLB, really, again, not a lot to complain about. Didn't have the awful Friday that so many did. Still not back at the high, much like other things, probably lagging, right? Hasn't done very much. So it's got potential if it starts to go. We need to see that high get taken out. And then, much like the XLY and other things we've looked at, it could then buy itself more room to move, but it needs to get through there. That's been a real problematic level for it near, let's say, 86-ish. Gets through 86, might really finally be able to power up, and that would really help this market to see XLY, XLB, XLI going. These are two areas that if they're both going, probably a good sign from a macro basis. People probably look at that and say, well, they're gearing up for something. I'm a little surprised by it myself, but again, I wouldn't fight the tape. I wouldn't fight the trend. Just the way life is in the markets. This is kind of what I'm looking for out of those. XLI is a little bit ahead. It's made a new high, and it sort of took that little corrective action and worked with it. And now it's extending. So that is close to happening in some of these other areas. And again, that would be a really good sign. And XLU, just because it's the obligatory check on XLU, but we really don't do much with this unless we start to see it really get bid. Then we're starting to think that there's a lot of defensive positioning, or right, they could start to like it more, right, if they think that rates are coming down, that which would help there. But you could see really ever since rates started to start of the year, it's been having a rough year so far with the TNX and just rates in general hanging in there to moving up, but nothing special there. I think we covered a lot of the secondary stuff we normally do. Let's take a look at XAU. The dollar is really hung tough. It didn't have a great week or anything, but it did hang tough. And so that you would say, well, if the dollar's not really powering up, maybe there's a chance here. But this, this really didn't do well and just hasn't done well. And again, like I've said before, I've been really happy that we have stayed away from this area. Not that there's been more paper than we've put in for things related to XAU, SLV, GLD. But if the dollar is going to keep rallying, usually, right, these will all have a hard time. Not always, but usually these will have a hard time. It looks like there's been less risk off happening and more risk on happening ever so slightly. So that's another reason why these things, are probably not doing well. But the paper that came in has been there here and there anticipating things, it seems like, but we had a couple ideas here and there, but we just never got its act together enough that it really was sending really high levels of confidence to us. We were just not really seeing that. And so it's been for a trader, it's been disappointment. I don't think disappointing. I don't think there's been a lot of great stuff to do in there. And it does have its day, it does have its moments from time to time where it really starts to threaten and potentially go. And you can get some really strong moves in it, but it just hasn't really delivered that for a while. And maybe it will, but it just, again, I need to see something happen, some changes to be happening before I can really get excited about that one. Otherwise, I'd say it most of the time. I own some. I'm happy that I do, and I'm planning on holding on to it and planning adding more if it gets a lot cheaper. So, and that is gold and silver, but I'm really doing it more just to be hedged. It's really just more of a small portion of the portfolio just to have it as a hedge, which is that better just have a little bit mindset. So, and yeah, sure, if it starts setting up for trading, we would definitely look at it as a trader, but we just haven't seen that. I'm trying to think if there's anything else that we really missed that we typically cover, but I guess the theme really is right. Some of these leaderships are giving way. We're seeing that really with XLC, and we're seeing that really with XLK. And these have been the two, right? Those have really been the two that have been the lead sled dogs. So they're a little bit concerning, especially XLK. Be careful there. Some of the Mag 7, looks like it sort of ran out of steam a little bit. Some of those names look a little bit vulnerable. So if what would be really impressive would be if this really does come off more and XLC maybe follows it, and yet somehow they keep buying and rotating into these other sectors, and we don't really see damage done to the index prices or index ETF prices. I mean, if that happens, that would be a really good sign, because these would cool off, take the break that they need. Other things would fill in their role. Those charts on all those sectors would improve. These would probably still be in an uptrend, at least intermediate term uptrend, until they held the 50 there in XLK, and an XLC holding probably the 50 would be still probably you're really still in an uptrend. So you got plenty of room to there. You're still way above even the 20, it looks like, in XLC. But that would be a good little sign if everything goes risk off when these are leading it, it's a totally different story. I'm just saying if they manage to rotate out of here into other things and it kind of keeps the market somewhat neutral, that's good. But it might be tough too, because I'm not predicting Apple, gets walloped. They've used the 200 many times in here to sort of draw in new shorts, flush out longs, and then reverse it, right? Just look at this one. There's one right near there, right below there, right near it right now. So they've done it many times, and then you get a lift that follows. But if it doesn't work this time, and Microsoft also follows suit, and it too kind of comes under pressure, which it's on the verge right now. I think Microsoft, I put an idea in on this one. I mean, to me, Microsoft's flashing a little bit of vulnerability and that it could drop down a little bit. Now, you never know what story erupts and over the weekend that's positive, or what they do with the NVIDIA earnings and how they use that to goose up anything else that's related to it. But those are your two big dogs, right? They don't really look great at the moment. Google does not look great right at the moment, right? These are your big dogs. Amazon hanging in there, but you can see where getting below that 20 there in light blue near 165, right? That would probably be a problem in Amazon. For NVIDIA is a different story. Tesla, it did look really good. We put it in Phoenix a couple of weeks ago, and it did deliver a nice little move up, so that's good. But right, that's still like below trend, below all the long-term SMAs. Shorter picture, it looks okay for now, but at the same time, not looking great overall. And then we have to look at Meta. And Meta could finally, we had a nice little trade in that this week, I think, in UOA Pro, but right, it's sort of flatlined, and if it could get pulled down by the market, and that could get pulled to the 20, no problem. So a lot of those look not either kind of neutral-ish or kind of right listless, while some look there's a little vulnerable if there's a little bit more weakness. So I think that's worth keeping in mind. I mean, that might be why some of these XLK, XLC look the way they do. But on the flip side, energy, financials, and transports and industrials and discretionary, right? All these kind of risk on areas and kind of better macro signs, they all look like they tried a little bit more than they have, and they're on the verge of maybe trying a little harder. They will see if they can get out of the blocks, so to speak. But if they do, they could buoy things if even if other areas are being sold off, and that might cushion any kind of pullback that may be forthcoming. So I think on that, I'm going to probably wrap things up. And I'm going to say, I hope something that we talked about helps you out this week or some week in the future. I want to thank everyone for tuning in. And now we have to get on to getting the newsletters out in everyone's hands. So have a great conclusion to what I hope was a great holiday weekend. And we'll see you all this week in the pit and various other places at Market Rebellion. Thank you.